Hey folks, welcome to the Pipnotic Symposium for the 27th of August 2019. Today we're going to discuss some supply and demand stuff for a change, and we are going to look at it from a slightly different angle. Okay, supply and demand is essentially the balance and imbalance of the quantity of an asset in a marketplace and the number of people who are in demand of this asset. And you can see very clear traces of this wherever anything is bought or sold. You can see that around this price here, this was a pretty advantageous price. Some people in the market thought that, so they started to buy. Price went up. It came back down. We got close to this price window, which was considered value historically. It got close to it. When price got close to it, more buyers piled into the market and began to purchase this asset. Okay, so it's essentially this whole way of identifying value in a marketplace of whatever is bought and sold. And supply and demand is just one angle to do this. Okay, and as traders, we're trying to find these value areas in the market. I wrote Pipnotic software that helps us do this, and it's able to identify price zones where the distribution of buyers and sellers and the commodity that is for sale is analyzed in a pretty unique but quite simple way, and the result of which is printed on the chart, and so you can see visually what's going on. Okay, and I just want to show you from a different angle now. Okay, so here we have this is an hourly chart, this is an hourly chart. This one does not look like this one, but they're the same essentially. You can see that the price kind of went up and then it went down, and at the bleeding edge here it went up and then it went down. Okay, and so these are the same. The only difference is that on this chart here you cannot see the 1 hour chart. This is a 1 hour chart, but you can't see the 1 hour chart here. You can see the weekly, the daily, and the blue is a 4 hour. Okay, but you can't see the 1 hour chart. If I wanted to see the 4 hour chart, I'd simply have to click on this button here and that would enable it, but things get a little bit unclear there. But you can see if we do that, then you can see pretty clearly what's going on. So now I'm going to disable the candles, and the ways I've done that is that I have set the color of the line graph to black, and so it's the same as the background of my chart. So when I press this, these candles disappear on this chart. So now I can see what's going on the higher time frames. All right, so super interesting and very powerful. And I like to zoom out a little bit because we have a lot of information being shown to us, and I just like to see like this. Okay, and so you can see here that price came down, it went up, it came down, and it went up. While you can't see that here, you can see kind of what it looks like here. And if we zoom in so that we're looking at the exact same price, you can see that this push here is represented by this 4 hour candle here. Okay, and then we had a pullback, which is here, and this is this here, and then here we had kind of accumulating at the bottom, which is just down here, and price rallied, we had a pause, and then price moved higher. Price rallied, it paused, and price moved higher. And so this is interesting, really interesting. And the reason this is interesting is because what we want to do is we want to find areas of supply and demand that are lining up on multiple time frames at the same time. Okay, and this is the whole reason for doing a multiple time frame analysis that we talk so much about. So if we go to, let's say, the Australian dollar, American dollar, you can see here that price went up to this level and then it went down. Why did it do that? This is, yes, it's a nice area. When price left here, it did not come back. The beginning of the sell zone is actually here. You can see price went through that and came up to here. Why did it do that? Well, the reason is, if you look over here, you can see that here we actually have an accumulation candle. Okay, this is a daily accumulation. We have another one here. And then this candle here managed to close below the 3 preceding candles. What does that mean? That means we have a lot of selling here. We have this here, we have a big wick, okay, which you can kind of see here. But on the 4 hour chart, which are the blue candles, it's just the slingshot being pulled back and then it shoots down. Okay, and this is the shot lower here. So this is the accumulation, and this is price leaving us. So let's look at the price of this. So it's at the 67. There we are. Line those up. So we're at the 67.75, and here we have, yeah, this is about 67.81. Okay, so this is pretty close to that level. And isn't it interesting now that, yeah, well, this, we didn't really know what this was, but actually, if you look over here, you can see, well, that this is actually daily accumulation. So we had actually, we had a doji, or a spinning top, we had a wick to the upside, and then price left. What does that mean? Well, that means that there's resistance up here. Okay, there's a resistance to allow price to move past this level for the time being. Okay, it's really interesting. And the reason it's interesting is because if you're focusing on one time frame, you can't see this stuff. You simply can't see this. We're on the hourly chart here. We can see the hourly candles. Can you see this by looking at this? No, you can't. You have absolutely no idea. So it's just a really good idea to be mindful of what's going on the daily, the weekly, orange, and blue, the 4-hour charts. Okay, let's go and have a look at the Euro US dollar and see what's going on there. So if we zoom out a little bit, price, this is maybe not such a good example. Yeah, okay, this is a good enough example. Let's have a look. Okay, let's have a look here. And you can see that price went up to this level here. But why did it go up there? Why did it go up there? And if you have a look here, you can see that we had this, first of all, you had a weekly selling candle. This is a really strong push lower. A really, really strong push lower. And here you had, what's this right here? This is a very nice continuation pattern. And so when this 4-hour candle, sorry, when this daily candle closed, we had 1, 2, 3, 4 hours, 4 periods, so 16 hours of accumulation to move the price lower, or distribution. And then this daily candle just shot down like a hammer. And look at the origin of this. The origin of it is just up here. So if we mark this off, what's this price level? Let me close this FX Street thingy here. We have a look here. What price level is this? This is a 111.70, 111.64. So you can see that price got close to it on this candle, but it didn't. If we enable the smaller candles, you can see that price just came to the wicks, then it left. Because there's so much selling pressure here, the price simply was not able to return to the meat, the volume of the selling. It simply reacted to the wicks, and that was essentially enough, and then price shot down once again. Okay, why? Because this is a 4-hour continuation pattern to push price lower, and it is also right there at the open of this candle. So this candle, this day, when this day opened here, it moved sideways. It went up and went down, and went up and went down. We had a tiny thin candle here. Then all of a sudden, the 16 hours, from 16 to 24 hours, price pushed down once and then twice, and then we closed here. Okay, so the origin of this push originates from here. Where did price go to? It went to that area there. You can't see that by looking at this chart, but you certainly can see that when you look at this chart. Okay, let's have a look here on the daily chart. Sorry, on the dollar Japanese yen. That's not a very good example. Let's find something with a really nice, clear example. This is messy here. Let's find another one. No, so we can find some good stuff. Okay, here we have this. This is a trade that I'm in. This is kind of like the last slice of the trade. And the reason I thought it would be interesting to get into this one here is because we had this daily push lower. We had 1, 2, 3 days of accumulation. Price moved up, then price shot up. Okay, so this week closed as a result of the end of the week really being bullish. So price didn't do anything all week. Monday, Tuesday, Wednesday, Thursday, nothing. Friday, boom, we had the cannon that went off and price shot up like this. Okay, and then we have price, it gapped up here on the Monday, and it came all the way back down to where? To this. You can't see what's going on here, but you can see that this is actually, price came down to the accumulation. If we, first of all, we mark off the high of the bodies of the accumulation. Okay, so we'll go from there. Price came back to it here. So the low of here is the 63.79. So here, 63, right there. So this is exactly where price came down to roughly. It came back to the origin here, which is a little bit deeper, just in here, and this is where we attracted buyers. We saw an influx of buyers that was required to push price higher. Now price is wriggling higher from there. Okay, so just another really good example. Let's have a look at this pound Japanese yen. Yeah, so we have, this is interesting. So we had price come up, we formed this top, we left, we formed this child, price came down, price went up, tested the edge of this hourly area and then moved away. Well, what's that hourly area? Will enable this, and you can see it. Continuation pattern, 4 hour. You see the bottom of it there. I'm just going to use the rectangle drawing tool. So from here, let's go to the top like that. Okay, just look at that incredible strength. That's shirt tearing strength. It cut down, okay, and it left. Where did price return to? Right to it, right to the edge of that 4 hour area. And you can see the software found it. We have the blue rectangle. This is the same as what you can see here, because the Pipnotic supply and demand software is looking at precisely what you're seeing over here, and it's drawing rectangles around these areas that exhibit strength. Okay, sorry about the wind. I'm upstairs on the first floor, and there's a breeze coming in, so I hope that's not interfering too much with the sound. But it's just a really beautiful example. It's just showing some the reason that this is the price is going to do. And so, I mean, when you're using the Pipnotic software, it's just a really good idea to pay attention to these different time frames. Here we have a red one. Okay, this is a daily candle. This is a daily pattern here. Okay, price went down. We had 1 day of accumulation, and then price went up. Okay, that's important. That's really important. Why? Because price was not able to hang out in that area for very long before moving higher. Okay, and the software is telling us, yeah, we have something going on in here. So that means, does that mean buy there? It says no. It says look further at what you can see down here. And here we have this area here that was established. Price came down, tested, and we left in a hurry. Okay, so the software is just trying to bring this stuff to your attention. Let's have a look at another example. And here you can see that, and I'm looking around here, and you can see very clearly here that price went up. We had a week of we had a price imbalance north 1, 2, and price gap down and then cut lower. Okay, and at the top edge of this, you can see we had 1, 2 days. So Monday and Tuesday, price did nothing. Then we had price breaking down. So Wednesday, Thursday, Friday, price sold off very forcefully. We had this low close, price gap down between this week, and now price is kind of drifting lower, and now we're kind of sitting sideways, as you can see here pretty clearly. But at the top here at the origin, I mean, this is the beginning of the sell zone, and just higher is where we have these orders to sell. These stops are pretty tight, so we'll have like these will expire before too long as well. And so for the time being, I mean, this is interesting, and so we want to take a stab at that. But these stops are pretty tight. Keep in mind, so they may be adjusted. If we have a look at another example. Let's see, 1 hour. Okay, so this is what we're looking at here. So, sorry, maybe it's not quite. Okay, one more zoom there. So now we have the zoom there. And so we had this area here. Price moved really quickly and forcefully down. We had Monday, Tuesday, Wednesday, Thursday, nothing happened. Friday, boom. Where did price go to? It went back to Friday's volume. Okay, the origin of the Friday move, and this is where price reacted right there, went down like that. Okay, let's have a look at another example. Okay, so we had Monday, Tuesday, Wednesday. We had Thursday, just here. Thursday was the candle that broke away, and price went up to here, which is the volume of Wednesday. So you have You have quiet days and you have busy days. You want to be trading price once it returns to the slow days or the origin of the busy day. This is the origin of this very busy day, okay? And so entry should be placed within this here, and this is exactly where price went to. Price went up to it and just shot down like a hammer. I mean, boom, boom, you can see very, very forcefully. We had another attempt, but that attempt was lower still, okay? And so just a really, really good example. Let's have a look here. What do we have here? That's not a very good example. Let's see if we can find some good examples. Something pretty. Trying to find something that's okay. Here's another good one. We had sideways. I mean, you can see that these candles, these days of trading, kind of happen within the range of one another. This is the one that left. Okay, the origin of it, you can see just here, we have 4-hour accumulation of short orders. This is roughly where the closes went back to, and this is where price retreated from. Price went all the way up to here. If you can see over here, make sure that these okay, they're lined up nicely. So price went to kind of the highs of this area here. Okay, but that doesn't matter because your stop would have been kind of above here. But it's fun, isn't it? We have the candle, we have the day of activity, and the retest is at the origin of the active day, which is when you start from the high, then you start to look back and you do your analysis here, your supply and demand analysis. So we had 4-day, we had the volume here, huge pushes, price returned to the origin, and then it left. Okay, let's do one more. Let's keep this short so we can find a nice clear one. Okay, here we have another one. Monday, boring. Tuesday, boring. Wednesday, an attempt to do something but nothing. Price came back into the range. Friday, this is the day. Price dumped. What happened when price came back there on Monday? Look at that. It came straight to it and then it left. Okay, super, super clear. So what do you want to be doing? Well, you want to be paying attention to this stuff. You can either have your big gust of wind coming in. You can either have your multiple time frame analysis kind of chart structure set up. So you have your monthly, weekly, daily, 4-hour, whatever you like. Or you can use the the intra candle indicator to help you figure this stuff out. It's super easy, and you can see you can see you go here. Sorry, a lot of wind. Okay, there was something to do there. You go here, nothing to do. You go here, something to do. Go here, it's very quick. Nothing to do, too messy. Go here, nothing to do. You just kind of do it that. It's pretty quick. Okay, here there's something to do. Monday, Tuesday, Wednesday, Thursday price left. Friday price started to retrace. And on Monday we got back to it. Okay, so we got back to the area here. The entry is pretty close to these patterns that you can see here. Okay, and so the volume and price poked into that on the 4-hour chart, which is here. So it becomes really clear all of a sudden because you can see nothing to do, sit on your hands. Okay, we have a price imbalance. We have an imbalance in supply and demand. The buyers are in control. What do you do? Buy the origin. The origin is the source of this move, the origin of this move, which is down here somewhere. Okay. Another one quickly. Just for the sake of example, nothing to do. This is ugly there, there's nothing to do. Okay, here we are, another example. Boring. Friday price left, Monday price returned to it. You can see here. And now we're starting to move lower. Fascinating. Right, I will leave it at that. The wind is picking up here and it's blowing my toupee off. If I did have a toupee, it would be in the garden by now. But it's just getting a little bit noisy and I don't want the sound to be affected. So I'll leave it at that. If you have any questions, post them. Add some comments to the YouTube video or post your comments in the forum. And I'll get to those. And I look forward to seeing you in the next video. Thanks for watching.